Record. Okay, I'm recording. All right. So I'll repeat most of the things I said before. Like on Friday, if you know you want to trade on Friday, make sure you are looking at the 4 hour and the 1 hour time frame, nothing less. Don't even come down to 15 minutes or 5 minutes. Do you get my point? Now, when you are looking at the 15 minutes, 5 minutes, they will always trick you out. I've seen many professional traders, on Friday, they just avoid trading on Friday entirely. And you find that most Fridays, they give out massive profit on Fridays. Like most Fridays, they give out massive profits. Do you understand? Because they are trying to complete the cycle. They have expected end that they want to meet for the week. Okay, the weekly net change. They want to meet up a specific amount of PIP that they've been assigned to meet up. Like they can hold down the trade Tuesday, Wednesday, Thursday. All right. They will just like they can do something like this. You know the market making move. You have your accumulation. You make it stop points, right? Now, after making the stop points, you've identified your double end. Instead of them to make a drop, okay, for you, what they will do is this: they will not make these drops. They will not make the drop. All right? You will not see any of this. So what they are going to do is they will keep chopping around, okay? Hopefully, let's say this is Tuesday. They made this double top on Tuesday, right? Wednesday, they will just be chopping around. Thursday, they can make one move and come back to that level again and still, this is Thursday. Are you getting it now? You see, all through Wednesday and Thursday, the market was in a range.
Yeah. Yes.
On Friday, they are definitely going to drop down the whole of that thing that they're supposed to give out. Okay, and maybe come back into
even on Thursday on GJ there was a serious ranging and the thing just keep ranging.
Do you understand? Like they will always play out the cycle. They will always play out the cycle. That's one thing. They will definitely play it out. So, and when you start looking Friday, you're looking up at 15 minutes or 5 minutes, like you just get confused. You don't even know where the trend is going. So if you're not looking at the 4 hours on Monday, Tuesday, Wednesday, it's not even necessary those days, right? But you see on Friday, they have a target. It's only when you identify that direction that you'll be able to get what they are trying to show you.
Even now, GJ is seriously dropping.
Okay, like you saw the video I made.
Yeah.
You remember the video? It's still the same.
Yes.
All is based on the 4 hours. It's just the 4 hours clearing out what they have in stock based on price action. Okay. Okay, I'll come in. Right, so this is it. Let's look at the 4 hour. Are we on the 4 hour now? This is the 4 hour. Guys, most of those of you that have my templates, okay, you understand what this is. Now, look, I was talking, there was one guy I thought just a few weeks back. He's one of the managers in Unilever. So the man was like, he wants to be an investor. He doesn't want the day trading stuff. He just wants something that he will lock into and leave it to run for money. Okay, focus on the time frame. Do you understand? And maybe buy 13 or 50 EMA close backs on those time frames. Like, you understand what is going on here? You know, we have our monthly structure lows here, right? And we have our monthly structure highs here. These are monthly structure highs, right? And these are monthly structure lows. Yes or no?
Yes.
Now, and you know, when the market falls below the structure lows, you are looking for what? A potential buy position. Right?
Buy.
Now, and when the market goes above the structure highs of the month, you are looking for a potential sell-off, right? Now, we were talking more about all these things on the 15 minutes time frame, but I will tell you guys, it's more powerful on the 4 hours and the 1 hour.
4 hours.
It's super powerful. Like, the only problem we are having is just patience. I get my point.
Serious level of patience.
It's just patience. Now I will explain what just happened here for you. I will explain what happened here. Okay. Now we fell below the structural lows. Now you see that what we have here is, this is the left shoulder, right shoulder, and this is the head. Yes or no?
Yes, yes,
Inverse
yes.
head and shoulder, right?
Yes.
And it's very easy for you to as well draw a trend line that goes across like this, okay, and catch this breakout, even from the 4-hour time frame. I get what I'm saying. Now we
Is
have
your
our
is
first
your
leg, first leg, retrace, second leg, retrace. Now look at the massive third leg,
interest?
retrace, and fourth leg, extension. You see that? Now they
Yeah,
made, I think above here they made a new higher high. Oh, how do I move this shit?
yeah,
Okay, here you see them make a new higher high. This is a W formation, and M formation, I mean. Like if you go to the lower time frame, you see breakouts go like this, okay, and they start dropping. This is what it is. I'll go down to the lower time frame now. You see. So from the structure lows right here, you know that you are looking for a buy setup in here. Okay, and look at the TDI. Now this is the RSI. This line you have here, the green line is the RSI. The RSI, your normal RSI, nothing special about it. Okay. Now this is just your 50 moving average, 50 EMA, but it's called the market baseline, all included in the TDI. I think all of you have this, right? Sheung, you have it. Sheung, do you have this template?
yes,
Tayo, you have it. I sent it in the group.
yeah,
Yes, I
yeah,
have it.
So now, what's good about the TDI? The one guy was asking me how to confirm stuff with the baseline and the TDI. There is another signal line. There's another red line they call the signal line, but I decided to keep that one out because I don't want to be jumping into fake news. I was designing my strategy to make me only catch up with the real stuff. I don't want noise. I want you to minimize every noise in the market because the only thing that will distract you most time is noise, market noise. Do you understand? If your entry signals are very sharp, you're going to be picking up every noise here and there in the market. And if you are trading the lower time frames, you are likely to be picking up the noises in the market. Just like the same thing that happened in USD card. The people selling USD card, it's not as if they are making mistakes, no, but they were just following in line with what they have seen in the lower time frame structure. Do you understand? But the higher time frame is showing you something bigger. So that's why you need to come up with the higher time frames, correlate it with your strategy so that you'll be able to minimize the noise. So you don't start picking up the wrong moves. You want to go in line with the trend, right? So you should do everything that will put you in line with the trend. So what I'm interested on this, oh my God. Give me 10 minutes, right? I have to come back. My light just went off. Yeah, I'm back. Um, Hello? Is everybody still here?
yeah. With you, boss. I'm
Okay.
following the GJ. Okay, I place a sell on GJ's and it's crazy.
Naija lights no day. I've been using gen since morning, so they just brought the light. That's why
Oh,
they took off the light. Okay, I'm bringing it back. Can you still see my MT4? Can you guys
yes,
still
yes,
see my
yes,
MT4?
yes,
All right, all right.
yes, yes.
I don't know if I'm still recording, but yeah, I'm still recording. So let's go ahead. So yeah, DJ is very crazy. Like my projection was this: if you are in line with, if you understand how the flow is going on the higher time frame, you'll be able to get across whatever they are doing. So when we had this inverse head and shoulder, this was I think last month. Okay, head, shoulder, head. Technically, you are supposed to be buying around here, but that's bullshit. I'm looking for somewhere here to buy. I'm buying here. Okay, around there, I'm gonna take a buy and hold it. Now imagine guys, you take this buy and you're able to hold it for the next 3 weeks. You're able to catch most of this small. Why? Because one, you are below the weekly structure low, and your baseline, your TDI is your RSI line is crossing the baseline here. Now, there's one thing I want to tell you about the RSI line. The RSI, what I enjoy about the TDI is this: whenever the RSI crosses the market baseline, is a major shift in momentum. Do you understand what I just said? Did you get what I just said?
No, no, I didn't actually get it.
Now, this is who is I think it's what's his name? Sheung, you are close to the road.
Yeah, this is very loud.
Sheung, you are noisy. Okay, let's go, guys. Now, this is the baseline. This is the market baseline. Okay, market baseline. All right. The yellow line is the market baseline. Now, the green line is our RSI. Uh-oh. What I want from this indicator is just to show me where the baseline and the RSI cross. The green line is the RSI, the yellow line is the baseline. What I need is the baseline cross. The baseline cross shows you the shift in momentum. Okay? When the market makers get into the trend, the RSI will shift with the baseline. I get what I'm saying. I don't care the time frame. It could be 4 hours, it could be 1 hour, it could be 15 minutes. It works the same. Do you understand? It works the same. Now, I'm more interested to pick up these signals when I'm above the high structure, like this area, when the price is above the high structure, and when the price is below the low structure. Now, when the price is below the low, what are we looking for? Come on, guys,
Hello,
just talk
boss.
to me. When the price is
Alright.
trading below the structure lows, what are we looking for?
We're looking for a buy. We're
We're
looking for a
looking for a
buy
buy
setup.
setup. Good. Now, when the RSI crosses the baseline from the lows, that is a buy structure. The RSI is trading below the baseline. This is the market baseline, the yellow line, right? And RSI was trading below it. When he made this cross, this is what shows me that the structure, the momentum have shifted. That is, the sellers are no longer having it. The buyers have kicked into the market. Do you understand? So what I'm looking
Yes,
for
yes.
is an upwards cross on this TDI. I need the RSI to cross from the downside, crossing the baseline from the downside. That shows me the trigger. It shows me the shift that the momentum has set into the market. Do you understand? The same thing, likewise, when I'm above the highs. Now, when the price is trading above the structural highs, I'm looking for one thing alone. I'm looking for only sell structure, only sell setups, right? Now, I want you to notice one thing. This is where the end of the month, this is the end of the month. Let me bring it down to the TDI. Now, you see that from the beginning of the month, the RSI was trading above the market baseline. You see that?
Yes.
The baseline was far away from the RSI. Now, the RSI never crossed the baseline all through while price was working and making higher highs. Are you seeing that? The RSI was as well making higher highs as well. Okay? Here we'll have what we call sharpening. I will do another video maybe explaining all the structures on the TDI. It's very complex, but it's very, very key, very vital, guys. So agree with me that he never had any contact with the TDI, with the baseline, right? The yellow line until here. Yes or no? Now, when that TDI, when the RSI crosses the baseline, I'll put on the crosshair now. At this point, what are we having? Look at it. You see, this is when we started having indecision candles above this high structure. Are you seeing it here now? Did you see it?
Yes. Yeah.
Now, below here is where we'll have the RSI cross the baseline, which is the yellow line. And on price action is the same place where we started having indecision candles on price action at the extreme highs. Are you seeing that? So what does this tell me? It tells me that there is now what shift in momentum. The buyers are done. The sellers are about to kick in. Now listen, when we're having this action was when there was not even a single drop on the trend line. Look, there's no single drop. It's around here. that this thing crossed over. So this action was taken on where we're having this, this switch over. This was the area whereby the buyers handed over the market to the sellers, if I can say it that way. Do you understand? Now, as the shift, I can wait for further confirmation. That is to say, I want to wait for this price to come and close below the 13 moving average. That's in EMA. Okay, on the 4 hours. So if I can get a close below this 13 moving average, I can start selling from here. Do you understand? And still, the market is still bearish. Leg one push. No, sorry. So we had leg one push, leg two push, retrace, leg three, okay, retrace. I think we're having leg four. Maybe that will extend to this level. Okay, I'm expecting it to drop down to the lows here, maybe by next week. So, but the first thing, we are having a support level down here. We're having a support level here, of which we need to take out this level first, right? We need to entirely take out this level. When we take out this level and the market break below this area, okay, then we can know that maybe what we are expecting is this market drops, break here, retest this level, and bounce back. Did you see it? I guess one thing. Did you understand what I just said?
Please let them mute that stuff.
That means that what? Do you have any confusion? And talk. I'm listening to you.
Hello, boss. Hello. Hello.
Yeah, I can hear you.
Hello,
Please, can you mute everybody so that we can hear you alone? Because there are a lot of noise coming from different backgrounds.
Okay.
Yeah, a lot
I
of
think it's actually from Shehu. Let me mute Shehu.
Everybody, please. Thank you.
Okay. I'm muting everybody. So, are we good now? All right. I can't even get a response again. It's funny. I hope you guys are hearing me, and I wish you are hearing me. So, this is just what I want to show to you. All right. So, what I saw here was this. Let me clean up all this bullshit and say why I made a video earlier about what was going on GJ. So, right. This was what I saw. I'm going to draw a straight line. We have a trend line here. I like to use trend line a lot. Now, we understand that when a trend pulls down, okay, when you have a pullback, when you have a drop, you're going to make a retracement, okay? It's going to drop again. You make a retracement. It takes a drop again. It makes a retracement. Now, most of these retracement will align with structural areas. You can see we have a structural area here where they made the previous low. And here we have a structural area. Okay, it break that level, came back to retest it. I'm sorry, let me blow this up a little bit. Oh, choose down to your power. I'm coming. I have to shift this. One moment. Okay, I want to blow it up. All right. Bring it back. Okay, sorry. I will clean this as well and draw again. So you can see the price action very well. So the first thing I want to draw is this. I make use of trend line a lot because they help me to show me breakout. Now we have these structures here. I will mark up maybe the structure levels first. We have this structure area and we have this structure area. Perhaps we have another structure area. Okay, do you guys understand this now? It's very simple and straightforward. Now we have this area that has been broken. We made a new structure high here, fine. The market dropped low, made a new low. These are new lower low. Okay, these are higher high. You understand the market flow as it goes. So we made a higher high. It came back to make a lower low. When he made this lower low, he have to make a new lower high. So we'll have our lower high up here. The lower high has to coincide with the structure level, right? So bouncing back in here, we know that we are going to retest this zone before the market will be able to make another second leg. So this is our first leg. First leg. So we come down for second leg. Our second leg has to take out the initial lower low. Now we took out this initial lower low, establish a new lower low right here. Okay, the market has to reverse or retrace back into zone to retest the broken structure area. So this makes this our what? Our new lower high. They came back in again, but they couldn't take out this lower low. So this place, but they made a new wick. So this will still call a lower low. Went back to retest these highs, making this a new, will I say a higher high? No, I don't want to break the structure. I'll call it a lower high. Now they dropped all the way in, breaking this structure area. Did you see that? Breaking this new structure level to establish a new lower high, a lower low, sorry. Now, since they broke, now you understand the basics of support and resistance, that when support is broken, it becomes a resistance. In this case, this was a resistance. It was a support. Here it was broken. When it broke, this support will not become, at this point, is acting as a resistance. When they broke it here, it becomes, no, it was acting as a support. When they broke it this level, it becomes what? It becomes a resistance. Now, this is now our new support. When they broke this new support, it becomes what? A resistance. So they have to retest that resistance before they start dropping down. Are you getting it? Now, this becomes our new support level. This meeting is recording meeting. I'm trying again. Oh my God. Somebody wants to join. Use the new link. I think I'm going to post the join with this link. Okay. Sorry, guys. Somebody wants to join the meeting. So, when we had this new lower low, they broke it as well. Here is a support. When they broke it here, it becomes a resistance. So what we saw this week was that they came back to retest that broken support that becomes resistance. They just came to retest that level, drift off a little bit, came back to test it again, and now. Hello? Mr. Smart, don't talk. So what just happened was that we broke that resistance level, that support level, which become resistant now. So we are going to make a new lower low. Remember, all these new lower lows, when they broke them, they established a new lower low. So this is our lower low now, right? I didn't draw this cycle here. Let me put it in. Remember, this is the area we are talking about now. Okay? This is the area we are talking about, and here is acting as a support now. As we are talking now, here is acting as a support. So we either want price to come down here. If it could bounce off this zone, fine. But I'm not thinking about that. What I'm expecting is I want this level to get broken. Perhaps we break it, establish a new lower low, okay, and perhaps come back to retest that zone and push down. So we are going to create a new lower low. Now here that is acting as a resistance, right? Here that is acting as a resistance, we're gonna come and test it again before we make a new lower low, just like the cycle has been going through. You see, we broke this support, establish a new lower low, come back to retest the new resistance level, broke the support which is here, break it and establish a new lower low. We went all the way back to retest that new resistance, okay, the new resistance, and we came back down to test the support. In this case, it didn't break it, went back up to retest and came took out this level again. When they took it out, they established a new one, a new lower low. So this thing that has been happening concurrently is what we are still expecting to happen here. We are expecting this place to get broken and they establish a new lower low right here. perhaps this is the new profit we're going to take. So all this while we are expecting this market to drop to a new level, of which I don't know the level for sure. Ask to mute. Okay, I don't know where that level is going to be for sure, but I think it's going to be some pips away from this level. You're welcome, Mr. Leo. Mute yourself.
Thank you.
Okay, so we want to break this level. We are still approaching that zone. So actually, the trade I had, I've taken out like 50% of the trade in here because today is Friday. I don't want to hold any trade over the weekend. But had it been this is not weekend coming forth, I would like to hold that that trade for it to break out this low and make a new lower low. Perhaps by next week, what we are looking for is for them to come back and retest this new resistant level that this support that becomes resistance. Okay, we want to come back and retest this level, and the market will drift up. Now, also look at your TDI. Your TDI is now buried below the baseline. What did I tell you about the RSI and the baseline? When the RSI crosses the baseline, it shows you what shift in momentum. It shows you that market makers have shifted the zone. They've gotten off that level. Okay, they want to
Admin,
move back.
please kindly mute all of us again. Okay.
I'm
Can you
asking.
mute all of us like you did?
I'm
The
trying to
noise
say
is
to
coming again.
everyone. Please, guys, mute yourself. I'm asking you to mute. There are people I cannot mute. Okay. Mr. Leo, please mute yourself. I can't mute you. Mr. Leo, mute yourself, please. Okay, thank you. Thank you, guys. Thank you. You guys are awesome. Okay, hope you are following. I will okay, maybe be typing so that I'm not lost. I won't be talking to myself. Where is the type? Okay, chat. If you have a question, you can post it on the chat so I can see what you are asking me. So I don't get lost talking to myself. All right. So guys, this was actually what is happening, right? So we expect them to come down and take out this low. If they take out this low, we're going to make a new low. So if you are holding pounds JPY, hold it very strong. Don't mind even holding it into the next week. All right, provided they are going to drop the profits for all of us. Okay, so this is what we are expecting, guys. Pounds JPY, pounds USD, they always correlate themselves. They're going to drop further down, right? So I want to show you gold. If you have any other pair you want me to talk about, you can post it on the, you can type it out for me as well, so I will know where to. But before then, I want to show you gold participants. Okay, I don't even know how to get the chart, but okay, maybe you just send the chat to me. Perhaps it will show up. Hi, okay, let's go to USD. Let's go to gold. Yeah, gold. So guys, this is gold. I missed this one and it's very painful. I hope you understand the pound JPY explanation, right? So we go straight down to the 4 hours and let me see. I don't know what. Can you give me 4 hours, please? Clicking on it. Okay. Okay, there we go, guys. Yeah, I took this trade, but I don't know. They were just up for me. You know, sometimes it's just like those moments you see. I have a picture I should have shared with you guys. You know, when it was as if anytime you take a sell, the market makers will just come again. They will just start moving up, and whenever you take a buy, they will start. You know, they will start going down. That's what happened to me on gold this morning. So still on structure level, this is the 4-hour time frame. Those of you that have my templates, you understand what is actually going on, that we are looking for a sell setup above the structure highs, and we are looking for a buy setup below the structure lows, just as we are looking for a sell setup above the structure highs like this. This is what I mean, guys. That is to say, these dotted lines, they are the monthly low, this is the monthly high, monthly highs. Okay, and this dotted line over here is monthly low. This thing is very important. I don't. It's not everybody that has it. Okay, this monthly low. Sorry, I'm writing another thing. So what this is showing me is showing me the flow of the high. I've seen quite a huge number of successful people that make use of this stuff. Do you understand? They just evaluate the highs and lows of the market. Now, most of you that have taken Steve's class, you understand that this is very important. Though the available high lows is just on the 15 minutes, but I went further to be able to provide the 1 hour and 4 hour high lows for myself. Now, the 4 hour high lows are measuring the highs and lows of the month. The 1 hour high lows are measuring the highs and lows of the week, while the 15 minutes is measuring the highs and lows of the day. Do you understand now? It's very, very, very vital, very key. Okay. So what you're actually doing, if you want to be a swing trader, looking at the 4 hour time frame or 1 hour time frame, you just want to wait for the price to come above these structure highs and structure lows. Then you take a sell after your confirmations have come into play. Do you understand? That's what you are looking for. So in this scenario, you see last month gold, came above. Let me see, it came around. I think 17,650, 17,000. $1,764 price area and drifted back into the zone. Okay, they dropped down this month into the lows of 1671 and bulled all the way up. And you could see that is very clear to the very, very close to the to the lows of the month. These lows of the month is not a magic, it's just the lowest price level of the previous month. That's what it's showing you. And this high is also showing you the highest price level of the previous month. This is the lowest price level, and this is the highest price level in that month. So this indicator is just going to paint out those level. Those of you in Steve that have taken Steve class understand this very well. So, but this one is just measuring the monthly high lows, while the one on the 1 hour is measuring the weekly high lows. That is 5 days price action highs and lows, while this is measuring 25 days price action highs and lows. Do you understand? So I got this set up. Basically what you're looking for. The best setups are those structure highs and structure lows. Okay, the M's and W's above the highs, the M's above the highs and W's below the lows. Those are the best trade you can ever catch. So we went further to, if you can identify these levels on the 4 hour, it's gonna be fun. It's gonna be a big win, right? It's gonna be a massive swing trading opportunity. So we went ahead to get these levels. So what we are looking for is structural levels above these highs. Now, when I saw this, I'm going to explain what triggered me mostly to this trade. Now, you can see that we have a bearish engulfing candle here. I'm not going to pay attention to every other thing that is here. I'm going to wipe all this out. So, the trigger that we have here, guys, is just this. This is where the shift started. This is a classic example of a bearish engulfing candle. And once we got this, bang, you see the market just drift away, all the way down. On the 4 hours, these EMA levels are showing you your take profit levels or your take profit areas. Now, in this case, this might act as maybe your first take profit, the 30 moving average. The 50 can act as your second take profit level, second TP, first TP, and this could act as your third take profit. In case you don't know, this is the 800, this is 200 EMA, 200 EMA. This is the 50, and this is the 13. All EMA, no SMA. All right. So we still have 800. I didn't put it in. Hopefully that one will be helping out somewhere here. So if that one is here, it's going to act as our fourth take profit level. These are very, very key levels, guys. Very key. So if you ever take a trade and you don't know where to take profits, use these moving averages. They're going to show you perfect and precise areas or zones where you can take your profits. Okay, they work out most of the time. So what we have here is this: we have first leg drop, market went into consolidation. I was expecting a second leg, this same second leg that happened, but something happened, right? I'm gonna wipe out this level and we move down to the 1 hour. Mind you, don't forget this level. Let me do this. Okay, don't forget this level. This year we had our bearish engulfing candle. So I'll go to the 1 hour time frame and show you what happened. So these are 1 hour time frame. Like I said, this is the highs and the low is somewhere down there as well. Low is somewhere down here, showing you the list price of the month. Also, I'll shrink it a little bit in. Yeah, this is the lows, this is the high of this week. The previous week, this is the lows, this is the highs, and this is the lows. So the same thing, we are looking for price to come above the highs and give us some reversal setup, and we take a sell. The guy asking me about the TDI baseline cross I talked about. This is what I was talking about. So these baseline crosses on the 1 hour time frame will show you what Steve calls the peak formation highs and lows. Most of you know about that. Okay, peak formation highs, and peak formation loads. Now, what we have here is just our peak formation high. Okay, the highest price level for that week. That's what we'll have. So guys, if we can draw a trend line, these are most of the things that help me to figure out if actually that is our peak formation highs or not. Okay, if we could draw, permit me, we're gonna manage it. But I like my trend line connecting the dots, you know, the lows of the structure. But anyhow, that is it. So this is one. I will need a breakout from this level to show me that the trend has actually changed direction, which most of the time coincide with the 50 moving average cross. Guys, this thing I'm giving you out is just what I teach in my, in my mentorship program. I don't know why I'm giving it out, but you guys are lucky. So have it and use it for yourself. Hopefully it's gonna help, right? So another confirmation that we need is the market baseline cross, the TDI. I told you one thing. The TDI shows you a couple of things. It shows you divergence, it shows you trend shift, it shows you momentum shift, it shows you retracements, and a whole bunch of things. Now, guys, you agree with me that what is divergence? You remember what divergence is? Who remember? Okay, it's when price is making higher highs and your oscillator is making a lower low, right? So in this case, you see price is making higher highs. This is a higher high. We took at that level and created a new higher highs. Okay, but look at what MACD is doing. MACD is making somewhat kind of a lower low. You see that this highs is higher than this highs. So this is a lower high. That's what we call divergence. When your oscillator, whatever it could be MACD, it could be RSI, it could be TDI, it could be whatsoever. Okay, it could be stochastic. Most of them measure out these things if you look very closely. So when they are doing different things, making a lower low, while price is doing a different thing, it's usually called what? Divergence. So if you look very closely as well, you could see this make an M formation. This, did you see that, guys? You see the RSI on the TDI paint out a very nice M formation for us. Yeah, that's one signal. That's one signal. And also, we had a shark fin here. We also had a shark fin here. But what I'm more interested on is I want to see when this baseline crosses each other, when the RSI crosses the baseline, the yellow line. You see, as price was making these new higher highs, okay, RSI was as well. You see W, you see that W formation, that small W formation right there. You see that? That's the same W formation that we have here. If you go on the 15-minute time frame, you'll be able to see that this is the first leg and that's the second leg. And TDI painted out that W very nicely. Okay, and it's giving us a shark fin as well. See, the RSI came out of the Bollinger Band. These bands here are called Bollinger PB. Okay, they came out of that zone and went back into the water. It's called shark bite, shark fin. Okay, well explained in Steve's class. So we went up a little bit, and when we had that cross, you see the RSI and the TDI crossed over around here, and price drifted. Let me put a cross here. I'm gonna put a cross here, particularly at that moment. You see, price drifted almost all the way up to that level. So I'm not gonna pay attention to that. I'm gonna pay attention to this, where I'm looking for my reversal downtrend. So when I got this downside, I want to see price close below the 30 moving average. Price did. We had that close below that 30 moving average. That's my first confirmation. Before I want to start taking any entry, I must want to see price close below the 13 moving average. Okay, or see it close below the 50. Those are my confirmation levels. Sorry, is everybody still here?
Yeah, we are here.
Okay, thank you.
We are with you. Proceed.
Okay, mute back yourselves, please. So, when we had this push, I wanted to see, sorry, am I still sharing my screen? Screen one? No, I want to share screen two. Share. Okay. I hope you can see my tools, my MT4 now. Okay. So when we had that cross here is what I'm looking for. This is what I'm looking for. Once this triggers, I want to see price close below the 13 moving average. If I want to take a buy here, it's going to be an aggressive buy. Aggressive buy position. If I want price to give me a little more leverage, I don't want to risk more. I just want to be, mild. I'll wait for the 50 moving average close. I'm gonna wait for price to close here. So this is gonna be my normal buy. I'm not sorry. Oh, sorry, sell. I'm sorry, guys. We're not talking about buy here. So this is gonna be my normal. I'm just pushing around. So that area is gonna be my aggressive sell below the 13. And here is going to be my normal sell position. Do you understand? So that was what I took. I took that trade somewhere here, and they just retraced over the night. I took it yesterday. Over the night, they made this retracement against me. Guys, you know what? I I was just, I think, 13 pips away from the last point where they got to. Like after I closed the trade, they moved just 13 pips more, and the drop started. Yeah, I was trying to manage risk. Okay, I was trying to minimize my risk, my losses. Yeah, you would have said, if you are so sure, why didn't you hold the trade? Yeah, I couldn't have been sure because they are now out of my sell zone. They are completely out of my sell zone. Holding on to that trade is just kind of, I'm hoping, and I don't want to do anything based on hope these days. I want to be sure of what I'm doing, right? But what I did was this: when they took this market up back against me, hopefully I'll be able to explain this on the 15 minutes time frame better. Let me get down to 15. So this is the area we're talking about, guys. So I took that sell, I think somewhere here. I took the sell here last night, and I saw this profit, and they went back all the way against me. I was looking at this level for them to take out this level. Did you see that? Which was this level as well. That was the structure level I was looking at. So when this person started protruding away from here, this was what scared me out. Like, what the fuck? I'm expecting them to hit this level and start coming down, right? Why would you now get across of, guys? These things are well coordinated. They know what they are doing. They know what you are looking at, and they know what to do at that level. You will agree with me that we'll have first hit here, second hit, this third hit, and they came back for the fourth hit, just extra in case you've lost your mind. You feel you are like they come back again. If you can hold this is gonna scare the fuck out of you, because you see we're still having a bullish divergence in here, a bullish trend in here, of which if they take out this level, you will be in a massive loss. Anything that make them take out this level and continue, you'll be in a massive loss. Do you understand? They know remember, Steve told us that they know the level, they see the trap zones, they see the order of everybody, and they know where to hit you out. That's just what they did here. They know many people will put their stop loss around this level because they've seen the structure in here. Okay, and they came intentionally to that level and gave a spike. Now this backside of the hour, I was impatient to wait for this candle to close. Had even I wait for the candle to close, I would have seen that they did not take out this level. They still closed below the structural level here. Let me clean this out and make a very clean drawing for you. I want you to see it properly. No, I made a mistake. more or less something like this. Okay, yeah, this is what most retail traders were looking at. They know you know this is a resistant level. You know these are resistance. We don't want price to beat off this area, and we have our trend maybe going this way and this one going that way. So they know we are seeing this level that they're not going to pass through here. But look at this candle. Take note of this candle here. You know that this candle was green all the way up to this level. It was pure green. When this was flashing you pure green, there's nothing that will make you not to get scared that they're going to continue up. Okay, but backside of the hour, at the end of the day, they close the candle still below the structure level. See, that means this structure still holds, this resistance level still holds. Okay, it came down a little bit, came back once more time to retest the level without breaking it. Remember from state class, when they hit a level once, two, three times without breaking it, that level becomes a strong level. So here is a what? Is a strong resistance level. Okay, and the trade took off. Now, what do you want to see on the TDI? You just want to see the baseline cross the RSI. The RSI cross the baseline. That's a trigger. Easy, guys. You see that? This is what we want. Just the baseline to cross the RSI line. And very quickly, they came down to the 800 EMA and closed out. That's about 150 pip more. What did I tell you about the EMAs? They serve as support and resistance level. They serve as what? Take profit levels. Now, if you were to put your take profit around here, it's a strike out. Boom, and they're out. And after hitting this 800 EMA, what happens? You see the price drifts back. Are they going to continue out? No, I don't think so. We've established a new other low. Okay, this is the point we've had there. I think this area. Since they've closed above here, let's look at what's going to happen here. But I know the 4 hours is still very bearish. Still very, very bearish. You know, gold is crazy, right? It's very crazy. I don't know what they're going to do when they get back up here. So I'm going to keep this trend line. This will be acting as my support. If they finally take out this level around here, if they take out this trend, I know that this is now countered. We might be heading back to the upside if they can take out this trend line. Do you understand? But this was what I was anticipating for today, just like I was faked out, okay? And when I got faked out, I just added 2 more trade on GU, which made me back the loss. Because I'm not ready to chase them around for today. Okay? So guys, that was it. That was it. I hope this class was very insightful. I hope you learned something. Okay? I hope you guys unmute everybody. Okay, everybody unmute yourself. Let's talk. I don't know where I got that stuff from that time. So
we are released from the prison.
I hope you learned something, right?
Sure, you've learned a lot.
Okay.
The only thing I think I'm missing is that I didn't come early, so the crossover of the TDI and the RSI, I didn't catch it. When I came, you were just about rounding that up.
Okay, the TDI RSI crossover. Okay, I will explain it just one more time. Okay, hopefully I'll do that on the 1 hour.
Okay.
Let me do it on the 1 hour. I'll go back to the 1 hour, clear all this shit out. So guys, still the same, like, you know, now let me show you something to show you that this trend is still positive. Don't get scared out if you're having a gold sell. Don't get scared out. As long as, what's the structure of a downtrend? What's the structure flow of a downtrend? You want to see price make lower lows, make a new higher low, new lower low, stops like this, make a new one, test, drop, right? This
lower lows. Downtrend is lower lows.
Yeah. You have your higher highs. Now mute yourself, guys. Mute yourself. Higher highs, we have lower lows. I'm busy. Go, 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 go. I'm coming, okay? Bye-bye. We have lower low, we have a lower high. We have lower lows, we have lower high, we have lower low, lower high, and we have a new lower low. Guys, this is all you need in a downtrend. What about an uptrend? You have a higher high, uh, higher low, higher high, higher low, higher high, higher low, like that. So you have your lower low here, you have your higher high, right? You have your higher low, you have your higher high, you have your higher low, higher high, and your higher low, okay, and new higher high, right? Now, how do you know when this is broken? Let's say, for instance, as price, let's say, let me take this for an instance. When price is making higher highs and lower highs, how do you know the structure is broken? Like, you could have something like this. Let me draw it out. We have this structure, okay, over here. You want to see price do something like this, maybe come back here, we test this level, okay, maybe come back again and break that level, come back down, you know, come back here. You see that? So what do we have here now? We have a new W formation, okay? Price went back up to retest a new structure level. I'm not writing any stuff, okay? And here we'll have a new structure level. I seen that. Now you want this new higher high to be broken, this lower high, you want them to break out this level. Now coming to retest this level shows you that they might be coming for a new leg. Now, not taking out this level shows you that there's something about to happen. You see, they respected this low without breaking it. We are expecting them to break it, the trend will continue. Maybe we test and make a new low, but they didn't break it. You see that, guys? They didn't break it. So they came, retest that level and pushed away. Now, after this is first leg M, this is your first leg M, this is your second leg, second leg W. Okay, this is your W formation, which you know is a very classic major reversal pattern. Okay, so you want them to take out the structural highs there. This new highs, you want them to take it out. When they take out that level, you are now a buyer. You now start counting this. Likewise, in this scenario, how do you know they've reversed the trend? When you start seeing stuff like this, they make a new high, maybe we test this level, come back up. Most times you don't see it like this, so you don't see it like this most times. What do we have now? We have a perfect M formation, right? We see them take out that level and create a new one. You see? And here again, they took out this level. I seen it, guys. This is a good example of what is happening here now. This is what's happening here. But just that maybe this is a half a
Please, as you are showing, it looks very clear. Okay, how can we use the TDI to figure this out?
Yeah, that's what I'm trying to show to you. I will show you that. I'm just trying to explain the structure. Okay. Now, what's important to us in terms of major reversals is to find out when this actually took place, right? And when this actually took place. What's the confirmation to this? That's what we want to know. Just like we have here now. In this case, we are in this same scenario. The same thing happening here is what is happening here right now, right? Okay, how do you find out this? How do you know that the trend have reversed? How do you find out if it's a peak formation high or a peak formation low? For now, this is our peak formation high. So there are three things that helps me to do this. All right, there are three things that I use in doing this. One of them is a trend line. I don't know if most of you like to draw this out. If you want to draw it out, fine. If you don't want to draw it out, I may clean it now. Okay, but before I clean it, let me draw this. Now, you can construct a trend line. I like drawing trend line a lot because I believe one thing, that in as much as your support and resistance act as barrier zones to price, also trend line acts as the same thing. When price is trending above the trend line, it's considered bullish trend. When it's trending below the trend line, it's considered what? A bearish trend. So I'm going to go ahead and put up a trend line here like this. Okay. Now, as price is trading above here, okay, as we have price trading above this trend line, we consider it to be in a bullish move. All through here is bullish. I'm not gonna sell. I don't know if you're getting my point. I'm not gonna sell because the price is still above the trend line. But what I want you to notice is what happens below here. What happens at this point, this area. Okay. Now price broke below this trend line. Price broke below here. Okay, switch down, came back to retest that level, the trend line, and switch to the other side. This is one confirmation. The RSI is also the second confirmation. You see, as price was making new highs, the TDI was as well making a new high. You see, the W formation is making new highs as well. So when price came back down and crossed below the baseline, that's when the shift happened. Oh, sorry. I'm going to pick up the crosshair and show you. This is the shift I was talking about. This is the shift. I think this is very rough now. I have to clean it up. Okay, so you see what I'm saying. So this is the shift. You see this same area. Look at the crosshair, where the crosshair is down here. And look at where the price action is. You see that bearish engulfing candle, that bearish first push candle is what shifted the zone. So when you see this happen above the highs on the chart, you see that the price has changed direction. Do you understand? The price has actually changed direction. So you can start looking for a downside move after this has happened. Do you understand? I'm still going to show you another example like what happened here. Okay, this is another bearish move. Okay, now I have to clean up all this. I'm going to show you another example. You are only to use this is more effective when the price is already below the lows and above the highs. Okay, that's when it's very effective, because at this point you are looking to see the overall direction of the trend. You want to see when they make the shift. What's going on? Sorry guys, I have to bring this back. Okay, this is what I'm talking about. Now I'm gonna drop. Here is below the baseline. Okay, anything up below here, I'm looking for a buy setup. Now also at this level, my RSI was below the baseline. Notice this. Okay, drop down below the baseline, give us a classic shark fin formation, and went right back into the zone. What I'm looking for is this baseline cross. That's what I'm looking for. The trend have shifted. Look at the points. Look at where we'll have the cross right here. You see that? It's coinciding with my aggressive move entry. So here is my aggressive entry after the baseline cross. I'm taking a buy around here. And this line is in line with your 13 EMA. Do you understand that? You understand that, guys? So this is what I'm just trying to show you. Now, when you have this kind of baseline crosses, okay, this extreme crosses is showing you that there is a massive change in shift. There's a trend shift in price. Now, look at this. Look at this. You know, it happened around here, and we have a double top. Immediately after that move, we had a double top. If you draw your trend line this way, the market shifts direction. Look at this area as well. We had a what? Maybe triple highs. 1, 2, 3, or head and shoulder. Right? The market what? Change direction. The same thing right here. We have a divergence. Okay? Price shifted direction. Do you understand it? So you can unmute yourselves now. Unmute yourselves and tell me if you understand this, so we can go ahead.
We understand this, please.
It's very clear now, right?
Okay, we are muted again.
Exactly. So that's like Tayo. Are you still following, Tayo? Let me hear you, Tayo. Unmute yourself. You can unmute yourself. Mr. Smart, you can as well unmute yourself. Unmute yourself, guys. Let's talk now. Unmute yourselves. So
It looks as if we've lost one person. We have 4 now.
you understand the theory, right?
Yes,
Yes.
I did.
Okay.
But sir, we can't do all of this with a smaller account. Like
Why? Why not? This has nothing to do with the account size.
okay.
Yeah, it has nothing to do with your account size. If you like, let it be $100, let it be $50. What has to do with that is the lot size you are taking, right?
Okay. Yeah.
You should just be taking 0.01. If you're having
Sure.
anything less than maybe 100, 200, $300, be taking 0.01. If your account balance is less than $300, keep taking 0.01. Okay? Consistently, just go with the flow. Do you understand? Wait for these things to line up.
Yes.
When they line up, you go with them. You'll be seeing profits. It has nothing to do with your account size at all. Now, what has to do with your account size is when you start taking big lot sizes on your small account sizes, okay? Yeah, most times it's gonna work out magically. But if what happened on Go should happen to me, like you have your big lot size, it's gonna be a problem. All right, where they
Yes.
made very big reversal on me, okay, before they made the main push. In as much as my analysis was right, they took back almost about 50 pips away.
Everything.
You see, about 50 pips, 7 pips against me. Imagine I was using a big lot size on 57 pips, I would cost my account.
Yeah.
That's why risk management is very important as well. No matter how good your strategy is, you have to mix it up with management. Do you understand? Not
Yes.
risking much out of your account, taking trades that are compatible to your lot size. Now, how do you know you are risking much? When you take a trade and your body is shaking, you cannot comport yourself. You know you are risking more. You are checking the trade every second. You are checking the trade.
Everybody is shaking. So if you have fever now, it means you are taking too much space.
Yeah. That's how
If you get fever, your body shakes now.
your body will be shaking. Yeah. That's how you know.
If you have fever, your body will be shaking.
I feel if you are confident with your setup, I see no reason to go.
Yeah, of course. But listen, I've learned one thing. I've learned one thing in Forex. Okay.
Okay.
You might have seen people that did it quite a number of times, but I've had more than 4 years experience in this business. And I will
Yeah.
tell you the wins and the losses are evenly distributed. Are you getting my point? Now,
Yes.
you don't know what is confirmed. Just like what I explained to you now, this gold setup is a very straightforward setup. But you don't expect, you are not the market makers. They have to distribute the pairs or the price how they wish to. Do you understand? You might be
Yes.
100% right, and the money on the table is not okay for them. They don't care. They have to go and get those money and come back down. Though you are right, but the heavy lot size you took might not be convenient for
Just
you to hold those retracements. Do you understand what I'm saying?
true. Yes.
Those are the things that are going to destroy you. If you have a very 100% setup, you can do however you like. Yes, I agree with you completely. I've done it countless times, of which you know, right? You've seen me do this
Yeah.
a lot of times.
Yeah.
But along the line, I understood that if I cannot control how much I'm risking, on the long run, I will have a problem.
There's over leveraging.
Exactly. So you don't have to overstress your account. Listen, the thing is this. if you can control what you are risking, yeah, you can always add maybe instead of risking 1 or 2%, you can make it 3, 4, 5%. I do that most of the times. Okay, but don't go above that. Don't go above that.
Okay.
Yeah, though there are some extreme areas I know that if I hit it, I will get it. Okay, but even as at that, there is no
What
setup.
is wrong with gold?
You get it? No setup is 100% sure. Okay, it could be sure today. The next one they will present next week might be, you find that it's 40%,
Damn.
but it's looking like that same previous one. Okay. Yeah. So, any other question?
Mo ti cut quite familiar.
Hello. Any other question? Unmute yourself, guys. Smart, unmute yourself. Mute sleep. We can talk now. We are over for the trend.
I missed the beginning of the class.
I can't hear you properly.
I said I missed the beginning of the class.
Okay, you didn't come in time. You didn't come in time, but you virtually got everything we were discussing. Okay, that's my GBP USD. You see, that shit flied all the way down. All my trade, they booked it out.
Okay.
Yeah, let me just run over this one for you. Let me run over this one for you. All right. The same thing, you know, GBP USD and GBP JPY, they correlate. They go in the same direction. Hopefully, GBP JPY too would have hit out those our levels. Okay, still,
It's still
yeah, it's still sluggish.
still bounced around.
Now, I understand something about these two pairs. You can see I removed GBP JPY. I just added it now. You see me when I added it, right? Ayo.
Yes. Yeah, I did.
Why did I remove it? There's what we call fractional disparity. Most of you that attended Steve's class. Now, fractional disparity is when they are moving one pair of the same asset class and they are holding the other one. You know, pounds USD, pounds JPY, pounds AUD, pounds New Zealand, pounds CHF, they are all correlated pairs. Okay?
Yes.
Now, they can be moving pounds USD, pounds CHF, pounds CAD, and they will hold pounds GG. Pounds JPY will not be moving. It will just be sluggishing around. But the other ones will be flying. This is a classic example. What's going on here now? Pounds JPY has taken out that level that we're looking at. This level, it has taken out the low structure.
Pound USD, yeah.
And
JPY is still strong.
Do you see that? JPY is still
Yes.
hanging out. It has not even gotten to that level. Do you see? So this is the fractional disparity that Steve was talking about. Like they hold one pair and move the other one. So I find that most of the time, the one they are holding frequently is pounds JPY. 70 to 80% of the time, they will hold pound JPY and move pounds USD. And pounds.
Why?
Is what I don't know, to be honest. I don't know why. Pounds USD, pounds AUD, we always act crazy. Sometimes even going against what other of these guys are doing. Okay, but they will still, you see, it has not even correlated. Though they are still bearish, but you can see how far away it is from the structural low. Just like GJ. You see that? So you see that means they are holding pounds AUD and pounds JPY, and they are moving pounds USD.
USD.
So anybody trading pounds AUD and pounds JPY will not see much profit as somebody trading pounds JPY, pounds USD, I mean, despite they are going the same direction. Do you get the logic now?
Yeah, it does.
You see how JPY, pounds AUD, and pounds GJ are just holding those levels, while pounds USD is just pushing. So in my opinion, I will say it's better you make use of, you keep trading pounds USD. Okay, 10-15% of the time they will move pounds JPY more than they will move pounds USD. But majority of the time, 80% of the time, they will move pounds USD and hold pounds JPY. So that was the reason why I took out pounds JPY. So let me focus on pounds USD since I'm having better push down there. Do you understand?
Okay.
So another classic one. This is one of my continuation chart patterns. Okay, I explained this on the video I sent out, right? So we had that's our overhead move. That's where the whole thing started, the peak formation high. All right, we had it break that level, retest, break down, retest, break down. I was expecting this. You know, I've been shouting it all this while since how many days now, right?
There's gonna fall. Yeah.
Pounds JPY, pounds USD is on a bearish sell based on the 4-hour structure. Okay, I saw it down there, and I know it's gonna follow that way. So I think now is the best time. Like the structure I explained, we are expecting it to, break this level, make a new lower low, maybe come back to retest it, and maybe do this.
Test that zone. Break and retest.
Yeah, this is what we are expecting. We are expecting it to drop down here. Hopefully, there's another level here, which may coincide with this level. Maybe they will even come down here, go back to retest this zone, and here is another zone. So you see, everything is zone by zone. Are you seeing it?
Yes.
So you see, it's obviously they are closing below this support level. They have break this support level. So breaking this support level means this trend will continue down. Yes or no? Closing below here,
Yes.
4-hour time frame, means that we're gonna see more lower lows. Hopefully by next week, they will
Next week.
gain this level and push down. Right? And if you look closely, you see that we are still very much bearish
Bearish.
from the 4-hour. So who learned something? Hope this was very helpful.
When I check the
Yeah,
news,
this
I see GBP is still very, very weak.
Was very weak. Mr. Pip, what happened?
Right.
The class is still on.
hello. Right now the only challenge I'm trying to figure out is that the reversal pattern where the TDI crosses the RSI crosses the TDI. You realize you can see a lot of crosses. So
Yeah.
the one that would really mean there's 10 out of event is what I'm facing challenge now.
Well, I will not lie to you, my brother. I've given out so much. Okay. If you are my student, I will go.
Yeah, of course.
All right. We have our entry confirmation rules that we follow. I get what I'm saying. So, irrespective of how many crosses you have on the TDI, it doesn't matter. There are other things that will still give you a clue of what's about to happen. Do you understand? So,
Yeah.
RSI is just one of it. It's just part of it. Do you understand? And there are other things that also plays a major key. Those ones will kind of also let you understand that, okay, this is not the, like, it's not just that you are using only the TDI to make your entry confirmations. There are other stuffs that will help you, like 4 more stuffs apart from the RSI, that will help you to understand where the entry is gonna be. Do you get it? So I'll reserve okay, admit, yeah, you're coming in, Mr. Smith. I will reserve that one for my students. Do you understand? Just, I don't know if you are interested to have the whole of it. If you find this very interesting, okay, I can give you maybe a 50% discount based on you've had much of it. Then you can sign up and you get the entire course. Do you understand? And whenever you have a question like this, you can just throw it up on me and we'll just deliberate over it. But I hope this one you had today was very helpful to you, right? to be honest.
Yeah, this has been very, very helpful.
Okay. So what I want you guys to do is this: add this to your arsenal. Okay. The template as well, I don't know, you might find it, I don't think it's much. Like, you can have these high lows on the 15 minutes, it's always everywhere, but the 1 hour and the 4 hours templates is, I've not seen very rampant like that. But my students have a copy of it, and you can see how useful it is. Like, it shows you the entire levels where you are expecting reversals in the market. You know, most people would like to be selling into this, okay, hoping that they will drop back down. But if you know where you are coming from, it's just like, okay, for most of you that have attended Steve's class, you know, when the price is shifting from the high lows, if you have an M, let me say for instance, this is your 15 minutes time frame, and you have price fence and M above the highs, okay, and start dropping, you don't look to buy back into that level. Let's say this is your high of the day on the 15 minutes, and this is the low of the day on your 15 minutes. And you see them make an M formation along this level and start dropping. You don't take a buy position here. Maybe you want to take a buy. You don't do that. You know that this is a straight drop. It's going to be a straight drop for the whole of that day, even a few couple of days. Same as the same thing here. You know, we are coming out of the low area. Hopefully this is half of Batman. You know, we have the M, we have the W, we have the triple top, triple bottoms, head and shoulder, and inverted head and shoulders. We have the half a Batman that looks like this, okay, and the price will just keep dropping, okay, just short, a little bit short off the M. You know, if they come back to retest this level, it becomes an M, right? But in this scenario, the M is not there. You know, they make something like this. This is just what we have here. That's what we have here. The inverse of it. Turn this upside down is what you have here, right? So you don't expect to start selling this kind of level 1, retrace, level 2. Let me count it for you. This is level 1, retrace, level 2, retrace, level 3, retrace, level 4. We're going back into the range. We're looking for a sale now. Level 1 drop, level 2 drop, and we are going for level 3. Maybe we'll get down here, we test here, and we'll come back for level 4 to close out this level here. I see it, guys, now. Do you see it? Yeah, I know it's not very easy to understand all these levels. It's not easy at all to, you know, count in line with them, and it took me a lot of time before I was able to master it or even understand what they are talking about there. But that's just what it is. That's what's going on. Okay, so that's what you have. So when you see this trend falling off here, you don't look to, yeah, you can buy. I bought this, to be honest. Okay, I took this because I understood what was going on. This is 4-hour time frame. It's a hell lot of profit, and as well I took this. Okay, how can I catch this most from the 15 minutes time frame? It's very obvious. Very obvious from the 15 minutes. You know, maybe we'll take a look at it. I'll clean all this shit out. Let's make our path clean. Okay, the guy coming in now, I'm sorry, we've said a lot. I'm exhausted already. I don't have Diet Coke. I should have revitalized and start from the beginning. I'm not Steve, I don't take Coke. Okay, let's get down to it. I just want
You share the
to.
you share the video later. I can see your recording.
Yeah, I'm recording it. It will be a cheat. It's a cheat video. All right, so I want to mark out these levels. Let's go to the 4-hour time. First, let's get down to the 1 hour and see how we can buy into these retracements. Now, if you see the picture on the 4 hours, you can take the necessary steps carefully on the lower time frame. But you don't have to forget where you're coming from. That's why you need the 4 hours. When you are buying into this, you know you are buying into a retracement. You are not buying into a reversal. You're not expecting this to go all the way back to this level. No. I'm very careful when I'm buying into this kind of retracements. I'm not a swing trader. I'm a day trader. But guys, I'm telling you now, I'm trying to move away from day trading into swing trading. But what pissed me off in swing trading is this. Imagine I catch this trade here. Let me show you a typical example. I don't know how to comprehend that. It's very it pisses me off all the time. I take a sell trade down here, and down here I have 276 pip, right? And I held on to that trade. I'm a swing trader. Imagine what happens, guys. They take almost all these things away from me. What I have here is now is 45, 43 people left. I don't have that patience. Like, I will get pissed off. Imagine from 270 back to 45.
Even leading to that point is another level of patience.
Like, you're not patient, you just close out. You close out at the worst possible level. And immediately you close out, see what happens. They drop it all the way down to almost 400, right? Now you have 400. They took it all the way back again. You have 190 left from 400, guys. This is crazy. Now they are bringing you back to the same 400 you saw last week. Why don't I even take out the trade since last week and just have peace of mind? At these drawbacks, these are drawdowns. They are retracements. You have to understand the difference between a retracement and a major trend. Now, in this move, this is a big time bearish move. Okay, the trend is absolutely bearish, no doubt. You agree with me? Now, these levels of pullback is what we are talking about. These pullbacks is what we are talking about. So I was like, why don't I find, something that can help me, sell here, buy here, sell here again, buy here, and sell here. Am I greedy? I'm not greedy. I just want something that will help me do this because I cannot withstand all this push, drop, push, drop. No, it's crazy, man. I don't have that patience. I will lose my mind and I will may likely go and close out the trade somewhere here or even close it out somewhere here because I'll be scared. I'm telling you the truth, guys. I'll be scared. I don't want to hold on to this. I don't have that patience to hold trade for this long time. So let me drift down to 1 hour and let's see how that played out. Uh-oh, it was actually bullshit. Okay, so this is the 1 hour. Let me tidy up I like my chart being clean. So guys, this is the retracement we're talking about. This is the retracement and this is the second retracement we're talking about. So what we're saying is this: how are we gonna sell here? Okay, how are we gonna sell here, buy here, sell right here, buy here again, and sell here? Okay, that was when I started trading forex. When I found out the difference between swing traders and day traders and position traders, I was like, why can't I just find a way that I would take this, take this, take this, take this, take this? The truth of the matter is that it's not easy. To count this level with these guys is the worst thing anybody can prepare to do. It's mind-blowing. And you have to practice long enough to be able to understand what they're actually doing, to go just like me reading your mind. You can't even read my mind, talk less of me reading your mind. But what we are trying to do is to read the market maker's mind and see what they are trying to do. I get what I'm saying, which is very difficult unless you're a soothsayer. I don't think soothsayers even can see what's going on in the forex market. I think it's beyond them, right? If not, many would have bought maybe witch doctors. So they tell them the direction of the trend. If they don't, they take a bullet. So this was it. So we mark out these levels. I'm going to go down to the lower time frame, the 1 hour. This is the 1 hour. You see the price was at the highs. Here it was at the lows. Here it was around the 50. Here is at the lows, somewhere at the 50 again. So I will show you this thing, guys. We can place what we call the fib levels. If Fibonacci can help you along with this, we can place a fib level from this push to that push. Easy. Why am I giving out my things? I'm giving out my stuff to you guys. Why? You guys are very lucky. Okay? This is what I like, what I teach. Okay? This is my entire course I'm reading out to you guys. You are getting major of it, but there are still other things. Okay? But I'm going to give it out to you. So, what is a fib retracement? Fibonacci. Listen to the name, Fibonacci retracement. What does it measure? It basically measures the retracements in a trend, right? Fibonacci retracements. What these guys measures is just retracements. It measures retracements in your trend. So when we have a push like this, a downside push, we have a downside push like this, the Fibonacci can help us identify where the retracement will end. before we start seeing another downside push again. What did I do? Did you get it? Now, this is our higher high, lower low, higher low, lower high, I mean, lower low, lower high. We're about to create a new lower low. Do you understand, guys? So, as well, the Fibonacci will also help you to see this retracement and know when the next trend is about to set in. That's what Fibonacci does, guys. So when you are in a heavy downtrend like this, and mind you, the trend is overall down, don't forget. When you're in a heavy downtrend like this, you are expecting your retracements around these levels. Now, I'll tell you a little bit about the Fibonacci retracement. There are two basic levels that I look up to. I have two levels that I look at mostly, okay? I don't care about this guy. I don't care about this guy. There is a place I use this guy, 23.6 level, okay? I don't care much about this guy, that's the 8.2, but I care much about these two guys, the 50 retracement and the 61.8. And I care most about this guy. This is the biggest guy among them. And this one is called the golden fib level. The golden fib level. The 61.8, okay? And this one is the main fib level. Also, I don't know what they call it. Maybe also the golden fib level. But this is just the 50% retracement. Like if we have a 100% push, like this is a 100%. Okay, from 0 to 100. What is half of that move? The half of that move is the 50. So when we have this 100% push and the market start going back into the range, we want it. Where is the 50% of this move? Is here. The 50% is here. That's half of the move. Okay. A little bit from the 50% is this 1.8, which is the golden fib level. You can see how we respected the price very neatly there. Okay. Nothing could be sweeter than this. Like, look at those two beautiful pins. And what structure is here? These are W formation. You see, first leg, second leg, bam. That's a W formation, right? And we pulled all the way.
Yes.
We pulled all the way back down. So when you know that this is a very strong fib level, the 61.8, when you understand that it's a very strong fib level, and you now come around and you start seeing W formation on that same fib level, and you know you're on a downtrend. When you see a W formation, what comes to mind next? Is a bloody sell. You want to sell that shit. Heavy, like Tayo was saying, when the trade is 100% sure, are you gonna take it? Yeah, this kind of sure trade that you're talking about. Something strong. Okay, this is something very sure, like stuff like this. But the thing is, can they go a spike above this level and come back again? Yeah. We don't want to lose. They want you to lose. In as much as is a very strong level, can they throw a spike above it and come back and close below? Very, very absolutely they can, and still continue the down move. That's why I tell you that no setup is actually 100% sure. Nothing is 100% accurate. Yeah, it could be 100% today, but the next other time, the next 20 times, it might not be. Do you understand? So I want you to approach every trade with a scale of preference, okay? Don't risk it all on every particular setup because it's not going to be the last. You just want to take what it has to offer and move on. Because when you throw everything in and the market maker sees that there's a lot of money hanging out around here, they will come and get those money, pin all of them. It's going to be a pin, mind you, backside of the hour. As long as they did not close above that 61.8, they are not violating any rule. The level still holds perfectly. But that pin that they threw up there will put everybody in problem. This is what these guys do. This is what they do every day. Okay? Yeah, in as much as here is a very strong level, okay? You see, the pins were just a little bit away. They were just, this one went up, came back down, went up, came back. Could he have gone something like this and still come back and close below here and still form a red candle? Yes. Has it broken this level? No, the level still holds. But this spike has destroyed every stop losses that is within this zone. Now, when you sell here, where is your stop loss? Your stop loss will be above this candle. Everybody's putting their stop loss above this wick. So people's stop loss are piled up around here. Some even put their own somewhere here. Okay, and when they throw this spike, they get all of them and they come back and close below here. It's very easy. If you're a market maker and you're gonna get a bonus if you go and spike out these guys and come back down, and you're gonna do it, you do it. And even after doing that, this level still holds. There's nothing bad in it. The level still holds because it's just a spike. They can't do it. Even if they close, they can do a railroad track here. They can close a bullish candle. Sorry. Let me draw this properly. I want to show you quite a few things that will happen. Okay, let me do with a square. Now, they could throw, a bullish candle, close over there, and paint another bearish candle, which is a railroad track, or even a bearish engulfing candle, Here. I don't know how I'm going to fit this. I'm just going to draw something on it, okay? And this would be the bearish engulfing candle, this bearish candle. Are you getting my point? This level still holds because if you go to the higher time frame, which is the 4 hour, you see it's going to be a pin, okay? This is what you're going to see. So the level still holds, but they've damaged
like an armor.
Something like that. But they've damaged all the stop loss that were piled up in here. Stop loss box or stop loss range. Okay, this is where the institution puts their stop loss within this level above this trigger candle. Okay, everybody puts their stop loss above this candle. So that's what makes, you have to approach every trading setup with objectivity. Okay, you don't have to go all in. Yeah, you could try it. It's a risk. You can try it. It works out for you. Okay, but hopefully it's not a good trading strategy. You have to allocate the same risk that you are applying to every other trades. You can put in 1% more or 2% more. That's normal. Okay, but taking it up to 20, 30, 40%. Oh my God, it's crazy. Okay, guys, I hope you understand this scenario now, right? So after that, what happens? We see our trigger. Okay, I have to take a lot of this out. Now, let's continue. What other confirmation do we need? We may draw a trend line in here that looks like this to also show us that this trend has broken. Now, look at when you have the close below this candle down here. Sorry. When they have the close below this candle, that's another confirmation. And you have this RSI baseline cross. Where is that, my guy? Is it Smart or Leo? Do you understand what I'm saying now?
Yes.
Yeah. I'm here.
So these are now. First, you see your M formation here, right? This is your structure. You've seen your structure M formation, structure pattern. We want to find confirmations to this trade. Why do we have to sell? Now you've seen your structure M formation, 1, 2, perfect, and they want to drop. Now you put up your trend line. You have a bearish, a complete close. Look at that close on here. I'm not talking about, you see, this candle took off all the way from here and closed below here on the 1 hour time frame. So this is a perfect, confirmation that they've switched. I told you that above this trend line is your what? Is your buy area. Above this trend line is your buy area, and anything below this trend line, you've entered into the sell zone. This is your sell area. cell area or cell zone, right? So when you had this complete closed candle below this trend line, you can actually execute your cell here after the close of that candle. What other confirmation do we have? We have the baseline blowing through the RSI blowing through the baseline, giving us a bearish confirmation. Okay? TDI is telling us now the trend is what? Is bearish. Trend line is breaking out, showing us that the trend is now to the downside. And you are seeing your M formation all above here. How many confirmations is that? You have 3. And you have your 61.8 fib retracement level. How many? 4 confirmations now. Yes or no?
Yes.
Good.
Yes. Yes.
I will save the last one for my students. Okay. So you have 4 indications that this is going to be a huge sell-off. Any question about this? Did everybody understand this now clearly?
Yes. I
Yes.
understand.
Yes.
Okay. Very nice. Very nice.
Yes.
Okay. So after this move, you know that you're going to have first, you're going to your targets. Now let's talk about the targets. We've seen our entry level. We want to talk about the targets. Here is our sell. We are selling from here. Where is going to be our target? Who can tell me where will be our first target?
Our first take profit, right?
Yeah, the first take profit.
The last low. The previous low.
The previous low, God bless you. That's the next, that's the take profit zone. So here's going to be our first take profit, the 0 level. Now, I don't have that notes here. I have a structure pattern. Okay, it's just, this thing works like magic. The strategy is just based off the the Fibonacci retracement level. Okay, this thing works like magic. Like if you have a trade get off the 61.8, I would tell you typically this is where your take profit will be. And believe me, 80 to 90% of the time, it will hit up that level. If you see a trade take off from the 50 retracement level, is coming down to that, I will tell you this specific level. Now, when you see a trade take off from the 100 or the 50 level, if you have a trade that builds up around here or around here, a trade that builds up from these levels, what kind of trade is that? Can anybody tell me what structure pattern can build up from this 100 or 0.0 level?
A big fat or a big fat W.
Thank you. That's going to be an M formation and a W formation. That's the kind of setup that build up on this level. All right. Those are the kind of structures that build up on these levels only. And when you take off from here, your take profit is the 0 level. It's coming down here. If it takes off from here, your take profit is this 100 level. It's getting down there 100% of the time. Do you understand? I'm giving you guys secrets, big secrets. If you're feeling what I'm saying, let me see, let me confirm to it. Do you understand what I said? Does it make sense?
Yeah, it makes sense. We're following. Yeah.
Good. So
just that today I lost a lot. I've lost all my profits, so I'm not in good mood, but I'm following.
Aha. So these things work like magic, guys. It works like every fucking damn time. Okay. These are the things that I show my students in my training programs, but I'm giving it out to you guys free. I don't think I'll be posting this recording on YouTube. I cannot post this. I only post it on.
If you post, Steve will have problem with you, you know.
What?
I said if you post it, Steve will have problem with you.
No, my system is a little bit away from Steve's system. You can see my 15 minutes is not having. Yeah,
Like
but
using his tools and his strategy.
yeah, it's more or less I learned from him. Okay, no doubt, I learned from him, but the whole process was kind of being complicating to me. Do you understand? The whole thing
Okay.
was very
Yeah.
complicated to me. So I have to find something that is very compatible to me, to myself. Are you getting me now? So in trading, one thing you must know is this: you have to find something that is very compatible to you, to yourself, something that is very you are very okay with it for you to, make headways. Like all this thing I'm showing you guys, even if you wake me from the sleep, I will show you the same thing. I will tell you the same thing. Do you understand? Because I've like done them over and over and over again, and I've mastered it. Do you get it? So, but it's quite most of the knowledge I got from him is what I used to build up this stuff. Okay, and it works. It works. Hopefully, I think you see so. So now I will move on to the next level. So since we know that when we took off from here, our take profit level is here. Okay, so now we broke that level like as usual, as expected. Since this is the lower low that they have, so we're gonna break that lower low, retest it, and make a new one, right? So this becomes a new lower low. These are retests, and here's another structure that got broken. Yes or no? We create
Yes.
a new lower low. Now they took off the entire. We're supposed to have a retest. I'm letting you in, Mr. Oh God. I'm accepting your offer. I'm accepting you. Okay. Mr. Liu. Yeah, Mr. Liu is back. I'm accepting you, but you're just writing joining things. All right. So what we are expecting here before is for them to retest this zone and continue down, right? Based on the previous pattern we've been seeing. But what happened? They break out that zone to make a new higher high based on our retracements. Okay. Let's clean everything out. Now let's talk about this new move. Okay. We've seen these retracements and how it played out. Now, can we also apply the same principle we used in identifying this big trend here? Okay, the principle we used to identify this trend and each retracement, can we use it to identify this trend? After this push, can we get this retracement? Now, let's see. What do you do when you want to do this? You just click on your Fibonacci retracement, take the highs, since it's a downtrend, you drop from the highs straight down to the lows. Right? You want to catch up with the last candle. Bam, that's it. That's it. Hi, with me, guys. That's what we are looking for.
Yes.
Now, what happens?
Yes.
We see our perfect retracement on. Sorry. You see, the 50 was doing its job clean. If I take this to the 15 minutes time frame, let me show you what you will see. You will see 1, 2, 3. What does this look like?
Head and shoulders.
Aha, head and shoulder or triple hits to the high, right? Or head and shoulder. That's what it is.
Yeah.
So if we go to the 15 minutes time frame, this is what we're going to see. And all these things are lining up at the key level. I told you I pay attention to only 2 fib levels. I pay attention to the 50 and the 61.8. And the 61.8 is the golden what? The golden fib level. So since I'm paying attention to this, I'm expecting this trend to come back to the 50% of the entire move, then continue the next move, which is what we did. So we got that 50% retracement and we are heading back towards south. Do you see, guys?
Yeah.
Yeah, let me still go elementary again. Let me go elementary, the same principle of what we did before. Let's draw our trend line, right? sort of a trend line like this. I like to use the weeks. I like to use the weeks of the trend line. Like you see, I'm using the week of this candle. I'm using the weeks of this candle. This is, some people would like to cut theirs across the body of the candle, like using this body here, right? But I don't like to do that. Why? I want to be sure that once price breaks that level, that's all.
You wait for price to close across that level.
Exactly. Now, if I put it here, I'm not taking consideration of this week. I'm not here to show what is right or what is wrong. I'm just telling you what I do. Do you understand me? Some people draw to the body, fine, they like it that way. Perhaps they have some principle that they use in applying it. But me, I like to connect my own to the weeks of the candle, right? And my reason being that I want that trend line to be the extreme, like the last point of whatever price restriction that we are having. That means if price should close below that or above that trend line, I am clearly off that zone. Do you understand? So that's why I draw to the weeks. Now you can see that we have a perfect closed candle here. You see this one wick thing. Let me explain this. I think I need to blow up this chart so you guys can see very well. But if I blow it up, everything will change. Let me blow it up anyway. Clear all. So I'll repeat myself. So I'm drawing it.
Was clear.
Yeah, it's very clear now, right? So this is how I like to draw my trend. I like to connect to the wicks. Okay, you see, I use the wicks down here to the structure low wicks here. And now I want to discuss what happens here. Okay, maybe I still draw another one using the body of the candle. Let me connect this and this. Okay, are they the same thing? Of course. What are we looking for? We want a close below this candle here, right? We want this close. Fine. But after that drop, we have a huge retracement back into the zone. So I want something that will keep me clear away from that zone. I want something that will keep me very clear away from the zone. So when I had this close here, I'm ready to go in. Though we went a week to retest the trend line. Now, one thing you should know about trend line is that you're going to have wicks and retests, right? You're going to have breaks and retests. Whenever you have a trend line, most time you're going to have a break and you're going to have a retest of that break. So what we are having here is what we have a break and we have the retest. So your entry level should be anywhere around this level, okay, for a drop short. Okay. Okay, can everybody hear me? Can you all hear me, right?
Yes, sir. I'm getting you.
All right.
Yes, sir.
Yeah, okay. So
Yeah.
okay. So share screen. I want to make sure I'm still sharing my. Okay, you can still see my screen, right?
Yes, sir. Yes, sir.
Okay, so I have this. Let me go back to the trend. Then I have this trend here and that trend then. Yeah. So when I had this breakout, here is my best entry. This is the level where I'm looking to take an entry. Okay. So if I'm taking a sell here, is the best place I should take a sell. And I have this drop, retrace, drop, retrace, drop. Like the whole of this is just kind of consolidation because we never made any much change here. Let me make it neat. Okay, the entirety of this is kind of, a consolidation. So we'll break off that zone, price started pushing down. How me, guys? So I hope all this is making sense. All right, guys. I think I've been able to share much light on this. I've given out quite a lot. Okay, and I hope everybody understood what I just explained. If you understand, let me hear you. And if you have still small confusion, let me also hear so we can talk about it and maybe shut down.
I understand. I'm with you, sir.
All right. Anybody does not understand?
I understood everything that I came in and I made, but the one that you said when I was not around, that is the problem.
That man don't go.
I don't pass.
Keep going back. We'll not end this thing today. Okay, chat. Yeah, I'm gonna type in chats. Okay, hello guys. Yeah, I was looking for this chat thing. So you guys can see my message, right? So guys, I didn't charge anybody for anything. I didn't charge you anything. Like it's a free knowledge. Okay. So the only thing you guys are gonna do for me is to just join my channel. Will you do that?
Yes, I'll do that.
Okay. So
Sure.
I'm going to post the link on my just few minutes. I'm going to post the link on the chat so you guys join and just share it with your friends as well. And I'll be dropping quite some little content for you each and every time. Okay, I'll post it here. Okay, I have it down here. I'm going to copy link. Okay, so that's the link, guys. That's it on the chat. No, no, Leo, don't call me king. I'm not a fucking king. I don't have a throne. All right. Okay, yeah, Mr. Pips, thank you very much for joining. Yeah. Thank you guys. And also, yeah, for those of you who don't have brokers, okay, you don't have like, okay, let me use this moment to talk about brokers. Like, guys, even though you have the best trading skills, okay, if your broker is bad, you're gonna suffer. Do you understand what I'm saying? If you have the best strategy and you don't have a very good broker, you're still gonna have problems because you keep running helter skelter because they'll be manipulating your price. All right, they will keep manipulating whatever you're putting on down to them. So the best thing you do is I have a claim brokers who can help you. They have the best price for everything we are doing here. They never manipulate their price. Their spreads as low as anything. You know, you can as well sign up with them and start having a very stress-free trading system, trading experience. Okay. I'll also post the link in here. IC Markets, most of you know them. Give them a trial. They're very good. But first, guys, join my channel, share the link with your friends, and I'll be posting a lot of more content in the channel for you guys. And if you have any question, always pop up to me. I'll be very willing to share with you. Okay? I hope you all had, you learned something very tangible today.
Yeah, we did.
So
We did.
you're
I
gonna
was following I'm following a guy on YouTube, and I think his content is also great. Also, one guy, Weeks Don't Lie or something like that. Yeah.
okay, yeah, weeks don't lie. Wow, I like the guy.
Okay, you know him too, but
Well, I've known
when you said stress free trading, I used to follow his live stream and all of that. The guy is is something else.
I know him. I've known him for a very long time. Yeah, he's a great
Oh,
guy. He's a scalper and he makes profit every fucking day in the market. Every day.
yeah, yeah,
It's, everybody with his thing. If you understand what he's saying, he's an expert in reading candles.
yeah,
Big time expert. Like that guy can forecast what the next candle color will be. And it's gonna go that way.
yeah.
So
Yes, it's crazy.
He's a hero in reading candlestick patterns. He's very great at that, and I like it. It's very nice. So, guys, subscribe to my channel. Be part of it. Is a discussion forum, and I'll be pumping in most of these contents, and you can as well help me to share the content with your friends. Okay. I hope you guys have a nice time, and it's nice time having you too. I really appreciate your time.
Thank
Thank
you.
you. God bless you. God bless you.
Yeah, you're all welcome. God bless you too. So what you're gonna do for me is you just keep using this stuff, okay? Keep applying them. And if you have more difficulties, you can get back to me. And if you feel you want to have the full content and every other tool that I use, I'm ready to give you guys 50% discount on my courses, okay? So it's very affordable to you. And you just put everything in line. Hopefully you start making profits in no time, okay? So my name is Pete Boss, and I have the company SM Capital. I wish you all best of luck. Bye.
Thank you.
Bye. Thank you.
Bye.
Thanks. Stop recording.